Withdrawing cash might get trickier this weekend with the future of Armaguard up in the air. The Qantas brand has taken a $384 million hit, and China's President Xi Jinping has been whining and dining top US business leaders. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 29th of March, 2024. Good Friday. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, after the show, stick around for my interview today with Fleur Brown from the Australian Retailers Association. Did you know that Easter is considered, I'm assuming you do know this, actually. I shouldn't have started like that. But Easter is considered one of the marquee retail events of the year, even though it is really kind of just essentially 4 days, and one of those is very much a strictly observed public holiday.
Well, it's a festival, Michael. And yes, I will be listening to you interviewing Fleur Brown. I think this is awesome.
Yeah, it is good fun. It's actually a really enjoyable chat. It is worth sticking around for. Sounds very, very arrogant to say that it's worth sticking around for my own interview, but it is a good one. It's an interesting conversation. It is coming up after the show. But the main story this morning, Adam, it might get a little bit tougher to get cash out at some stores this long weekend. Coles has limited cash withdrawals at its stores over the Easter break amid ongoing upheaval with money provider Armaguard. Now, Armaguard is a big business, supplying almost 90% of the nation's cash, but it is warning that its business operations are no longer financially sustainable because of the substantial drop in cash use.
Yeah, Michael, this is a big practical concern in the near term for places like Coles, which the Australian reports is worried it may see cash physically stuck in Armaguard's vehicles if the business collapses into insolvency. Cash withdrawals at Coles have been reduced to a maximum of $200, down from $400 at the supermarkets. The Reserve Bank of Australia has been coordinating talks between banks, supermarkets and Armaguard, but late yesterday, Armaguard owner Linfox rejected a $26 million deal and refused to open its books for the due diligence process. Linfox has apparently tipped in more funding of about $10 million to get it beyond the Easter period.
So, Adam, is this going to encourage everyone to go cashless? I mean, just because, out of necessity, really.
Well, it's the right question, isn't it? But that's not the plan at the moment. A Coles spokesman told the media that the company wasn't transitioning to cashless payments, but is instead taking steps to prepare for disruption. Cash will still be accepted at supermarkets and liquor stores. On a national level, the government and departments only recently reaffirmed their support for cash in the economy as long as there's demand for it. Right now, there's still a level of demand that warrants Australia continuing on with physical cash, but that's not to say it'll forever be the case.
Yeah, it's a really interesting story and really quite problematic for a lot of stores trading across what we've just described as a very busy period for retail.
Yeah, and if some people don't have options, then it'll be of particular concern for them, obviously.
Yeah, indeed. All right. Now, of course, it is a public holiday today, Adam, and we are still working, aren't we? Because we never take a break.
Dedication.
Yeah, that's right. It might be a short week, but it ended with a massive bang for the ASX. There were records tumbling kind of left, right and centre, which is a terrible cliche to use, but I'm using it anyway. You had the S&P ASX 200 closing up 1% to 7,897 points. That's a new closing high. So there's one record. Tick that one off. There was an intraday record broken as well, hitting 7,901 points. Tick that one off. I mean, there's two records straight up. How many more do you want?
Yeah, big numbers heading into the extra long weekend. Every sector saw rises. Metals, mining and materials led the charge. Real estate and resources also did well. Mining giants were the big winners for the day. BHP was up 1.4%. Pilbara Minerals was up 2.1%. Investors and fund managers are discussing how long this rally can continue, but it's defying many expectations at the moment. Gold also had a solid day, nearly reaching a record, and as a result, gold miner Newmont was up 3.3%. The price of the precious metal, Michael, is sitting at around US $2,216 an ounce.
And that leads us very neatly into international markets. What is happening on the world stage at the moment?
Michael, the Japanese yen is making headlines again, hitting its lowest point since 1990 at 151.7 versus the US dollar. Finance Minister Shunichi Suzuki is closely monitoring market movements and said the Japanese government is preparing to take bold measures against any excessive moves. So nothing is off the table when it comes to direct intervention in the currency market. One to watch over in the US, the world's biggest asset manager, BlackRock, has been issued a legal warning in Mississippi over alleged false and misleading statements to investors. The concern relates to BlackRock's ESG investment strategies. BlackRock says it is committed to following the laws in every respect. Also in the US, Federal Reserve Governor Christopher Waller has watered down expectations of rate cuts. He reckons recent inflation figures have disappointed on the upside, and until there's at least a couple of months of better data, there's less of a case for big rate cuts.
And just quickly, Adam, we may as well include this. The Aussie dollar is currently buying, if you had to guess, thinking that yesterday it was buying 65.3 US cents and the day before it was buying about 65.3 US cents. If you had to guess what the Aussie dollar was buying at the moment, what would you say?
Even on a record day on the market, I'd say 65.3 US cents.
Oh, well done. Great guess. Very, very lucky. There's actually a bit for us still to get through. We'll be back in a moment with the rest of the day's business news. Adam, auction volumes will, of course, slip for this Easter long weekend, but CoreLogic actually thinks this could be the busiest Easter on record. There's going to be over 900 homes going under the hammer.
Yeah, Michael, I think this is indicative of the supply and demand scenario. Volumes are currently up 40% on Easter last year, and that's when there were about 652 auctions. So Sydney will get most of the action this weekend with 429 of the 926 scheduled auctions. Melbourne is expecting 281, another 96 are scheduled in Brisbane, 56 in Adelaide, 47 in Canberra, and just 4 in Perth.
Now, this next one's a fascinating story. A cool $384 million has been stripped off the Qantas brand value in an indication of the damage done to the airline over the past year, which was really a shocking year for the company.
Yeah, this one was a bit of a whack, Michael. The analysis was undertaken by Brand Finance, which calculated the Qantas brand at $2.7 billion, down from $3.1 billion. Its ranking worldwide dropped from 16th to 21st for airline brand value. Top of the list was the USA's Delta Airlines. Another ranking of the strongest brands had Qantas in the top 10 last year. It has now fallen out of this category. Its brand value peaked in 2019 ahead of COVID and is now at its worst levels in 9 years. Such a huge turnaround for the business, which told The Australian it's working on rebuilding its reputation by putting hundreds of millions of dollars into customer improvements and technology updates.
Yeah, it's extraordinary to think, isn't it? Because that last year there was just that run of events where they had the really high airfares that fed into those record profits, and you had then CEO Alan Joyce fronting a Senate committee talking about the cost of living. You had all of those kind of leadership changes, and the big one, the ACCC, taking legal action against Qantas.
Yeah, lost luggage, call centres struggling to deal with inquiries.
Yeah.
All at the same time.
Yeah, just so many things all happening all at once. So now we know, really, the damage that's done in dollar terms.
Yeah, it's a valuation that's quite important. Obviously, I think we all want to see Qantas trade out of this.
Yeah, absolutely. Now, Adam, question for you. Would you want a home loan that tracks the movements in the RBA cash rate? It's one suggestion from a House of Representatives Economics Committee looking into better competition and prices.
Look, I might, Michael. It depends on the circumstances, of course. Fixed variable or one that moves with the RBA, but that's probably a lower risk than just saying whatever the banks want to pass on. So maybe.
Yeah, it's an interesting proposal, isn't it?
Yeah, it sure is. So this inquiry suggests the government should work closely with big banks to trial a new tracker mortgage product. This would see mortgage variable rates move directly in line with the central bank cash rate rather than at the lender's discretion. So there's similar products like this in the US already. The committee thinks it would stop mortgage holders who don't spend time shopping around and keeping an eye on their loan from ending up too far away from the best available rate. And it could stop customer anger against banks for not passing along rate cuts in full.
Adam, retail turnover had a 0.3% bump in February, with Taylor Swift responsible for a rise in clothing, merchandise, accessories and food sales.
Yes, Michael, Taylor Swift fans flocking to 7 sold-out concerts in Sydney and Melbourne have been attributed to a big monthly spending boost by the Australian Bureau of Statistics. And no shock, New South Wales and Victoria had the biggest rises, but when you look past the influence of Taylor Swift, which is obviously a one-off set of events, it's not a hugely optimistic picture. Underlying retail turnover was up only 0.1%. So spending is absolutely stagnating.
I love how you said Taylor Swift fans. You just can't bring yourself to say Swifties, can you?
It doesn't feel right.
Oh, no, it's just, which is why it's quite fun to just kind of poke at that a little bit and see if we can make you squirm. All right.
Successfully.
Excellent. Let's move on to international news now. And Chinese President Xi Jinping has met with some of the top names in the US business community, urging them to invest in China.
Yeah, Michael, it was a high-profile hour-and-a-half meeting in Beijing this week. Beijing broadcaster China Central Television named the attendees as Blackstone's Stephen Schwarzman, Qualcomm's Cristiano Amon, FedEx's Raj Subramaniam, and Bloomberg chairman Mark Carney. The business bosses were able to ask Xi questions, including about the challenges facing his economy, to provide confidence, encourage investment, and show that Beijing still welcomes interest from the US businesses.
Yeah, but US Treasury Secretary Janet Yellen has just taken a bit of a swing at China, though, at a press conference, which does arguably complicate relations just a little bit between the two economic juggernauts.
Yeah, the timing is notable, Michael. Yellen criticised China over excess capacity buildup, which she claims is distorting global prices and production. She's particularly bothered by Beijing giving subsidies to manufacturers to help them compete on a global scale with an unfair advantage. Now, that's especially concerning for new emerging industries like EVs, battery storage and solar. She would not weigh in on whether the US would retaliate with its own trade actions. So watch this one.
And finally, Adam, Israeli-American author, psychologist, and the grandfather of behavioural economics, Daniel Kahneman, has passed away at the age of 90.
Michael, he was an absolute leader in his field, and I'm sure many of our listeners have heard of or read his best-selling 2011 book, Thinking Fast and Slow. It is an absolute business classic. One of the big economic myths that he debunked was about Homo economicus, or the economic man, the idea that people act rationally and out of self-interest. His data found that people too often take mental shortcuts that lead them to choices that don't leave them better off. He found that people place too much faith in their institutions, are overconfident, and are good at pointing out other people's foibles, but not their own mistakes. How's that for a whack?
That's quite a legacy, isn't it?
Yeah, he was such a great thinker, and so much of his books have become reference points in business and with economists too.
Yeah, quite an extraordinary man. Up next is the Fear and Greed daily interview with Fleur Brown from the Australian Retailers Association. A must listen, Adam.
It's as simple as that. And you know I will be, Michael.
I know you will be.
Very, very closely.
I know you will be, and I know you'll be giving me notes afterwards. So thank you. I appreciate that. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget, it is a long weekend, but we will be back again tomorrow morning with the weekend edition. And it is going to be a very, very, very competitive event.
Game on, Michael.
Excellent. Thank you, Adam.
Thank you, Michael.
It's Friday, the 29th of March, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.